Good morning, everyone. My name is Lisa Carlson. I'm the Chief Exec of Canterbury's Business Improvement District, and a very warm welcome on this cold Monday morning in January to our first training and webinar session of 2026. And this one is on business rates. We're focusing on looking at the two things. One is the new valuation, revaluation from the Valuation Office, and the other aspect is some of the announcements made from government on new multipliers and transitional rates relief, etc. And we are really pleased to be joined by Sara Spark from Partnership One. That's the organisation that works with some East Kent local authorities. So she's effectively from the business rates team and will be taking us through the new announcements that we all heard when the budget was announced at the end of November and what that means in terms of how business rates are being calculated and what transitional rates relief looks like. Sara won't be able to answer any specific questions you might have about your own business, but rather kind of general questions today about how the process is working. But you can follow up directly with her and the business rates team afterwards. So she'll have her email address. And in the chat throughout, as Sara mentions, any resources or website links, Rachel will be putting those in the chat. So without further ado, Sara, would you like to share your slides, and thank you again for joining us today.
No worries. Okay, are my slides showing now?
And if we could just make sure if someone could let us know they can see the slides, that'd be fab. Yes, Claire, thank you. Great.
Perfect.
All good.
Thanks, everyone. Okay, my name is Sara Spark. I'm a business rates team leader for Partnership One. So Partnership One calculate business rates and collect business rates for Canterbury City Council, Dover District Council and Fenwick District Council. So the BID team have asked me to pop along and give a quick demonstration of what's happening in the business rates world. As you know, there's been quite a lot of news on this recently after the budget. So I just want to go through some of those areas. Just bear in mind that some of the areas are still to be ironed out, for example, pubs. We haven't actually had any update as at this morning. So I'll run through as much as I can for the time being. Okay. So what I'm going to cover today is I'm going to go through a background of business rates, what they are, how they're calculated. I'm going to go through what support is available to businesses. So you've got small business rate relief, retail discount, transitional relief. Then I'm going to pop through the April 2026 changes, which are hot on the press. And I'm going to quickly go through recovery as well, just to give everyone a background as to what the recovery process is, because I think it's quite important. So what are business rates? So business rates have been around for a number of years, but actually it kind of stemmed right the way back to the Elizabethan era. So Queen Elizabeth I, in her era, they brought in the Poor Relief Act. So basically they replaced giving charity to taxing land. And this was responsibility of each parish to care for the poor, and so any taxes raised were used to pay for poorhouses if people couldn't work, or for workhouses if they were able to work. Over the years, it's kind of evolved to being a tax levied on buildings, and in our current version, we've got council tax, which is tax levied on dwellings that people live in, and business rates for non-domestic buildings. Non-domestic buildings can also range from things like advertising boards, right the way through to banks, shops, all those kind of things. Telephone masts as well, for example. Any money that is raised from council tax and business rates is used to fund local services such as education, the emergency services like the police, fire, and infrastructure, so roads and rail, all that kind of stuff. All the current rates fall under the Local Government Finance Act. That's from 1988. Again, that's getting quite old now. And the way they're calculated is there's a multiplier that is calculated by the Treasury each year. And then the rateable value of the property is valued by the Valuation Office. So I've done a quick gross calculation for you here. So there's a property value of 100,000. And that's multiplied by a multiplier of 55.5p. That would give you a gross charge of 55,500. So that is like the gross starting point of how the calculation is made. A business might get other reliefs on top of that as well. So, but I'll go through those in more detail in a bit. So the first half of the calculation is the valuation. So a rateable value is calculated by the valuation office. It's not done by the local authority. There is a number of lists that happen. For example, the current list we're in at the moment was brought in 2023, but it's based on properties or their valuations of 2021. The rateable values are to be revalued every year, so this is quite different to the council tax, which hasn't been valued for a number of years. For business rates, they're revalued every 3 years. Our next one is due this year in April 2026, and that is based on valuations from 2024. There's a few valuation methods that they use. They can use a market rental evidence, which is mainly things like shops. So they will look at the leases for a particular type of property in different areas. Then you've got the profits method, so that's where they're looking at income and receipts. So for businesses like restaurants and pubs, that's what they'll use. And then you've got a contractors method. So if they're looking to build, say, a hospital, they will work out how much it costs to build the hospital from the ground up, and that's what method they'll use to value that. The valuation is important to know that it is made regardless of whether the property is leased or not. So even if it's empty, the valuation office will still make a decision on what the value of the property will be. It will be based on an antecedent valuation date. So for the 2023 list, this was back in the 1st of April 2021. And each valuation list will have a certain tone to it. So for the current list that we're in, as I said, it was done in April 2021. So if you can cast your minds back, we were in COVID era at that point, where we were in and out of lockdowns and tiers, and some businesses could open, some businesses couldn't. So at that point, the markets had dropped quite a lot. And for example, if they were looking at profits methods of valuation, a lot of pubs, airports weren't working. So income from those businesses had dropped. For all valuations, the ratepayer has the right to seek a revalue of the decision. That can be done under a check, challenge or appeal process. So if customers not happy with the rate their property is valued, they would go onto the VOA website, do a check, that decision be made. If they're not happy, then they can challenge it, and then if they're still not happy, then they can go through an appeal. The other side of the equation is the multiplier. So these are set every year by the Chancellor of the Exchequer, and they announce them at the autumn budget. So currently we have 2 multipliers. So we have a small business rate multiplier, that's currently 49.9 pence, and that's for all properties that have a rateable value of under 51,000. Then we have the standard multiplier, and that is 55.5p for all properties that are valued over 51,000. So it's pretty straightforward. I've popped on here a list of the multipliers over the years. As you can see, from 2019 it was 50.4p, and then for small businesses it was 49.1p. Hasn't really increased much over the years, but this is all to change, which I'll go on to in a bit. So what support is available for businesses? So small businesses, if they have a property of below 15,000, they can claim up to 12,000, 100% relief. So if the RV is 12,000 or less, providing that's the only business in England and Wales, then they can get 100% relief. If the RV is between 12,000 and £1 and 15,000, they will get a tapered relief. Currently, if the business takes on a second property, they can keep the small business rate relief on the first property, and this is slightly going to change soon. There is scenarios also that if the properties that they're taking on, if they take on a third property, for example, they're all below 2,899, and the total of the RVs, this is outside of London, is below 20,000, then they can keep the small business rate relief on the original property. It's very rare that happens, because a very small RV like that, you're looking at things like garages with an RV of just under 3,000. So from 2025, in the announcement in the budget, if a business takes on a second property, they can now keep small business rate relief for 3 years, but that's only from the day after the budget. I'll go on to that in a bit more detail. Businesses at the moment can get retail discount. So this was brought in during the COVID era. As you can remember, we were not going out, we were stuck indoors. So pubs, retail all took a massive hit at that point. So with the people coming back to work and going out and shopping more, businesses still needed that time to recover. So retail, hospitality and leisure relief or discount was brought in to help businesses in that process. It was only for a short period, but it has been extended over a number of years as businesses still needed that little bit more time to get back to normal. So I've popped on there a list of what the reliefs were over the years. So 2023 to 2025, you're looking at 75%. Current year we're in at the moment, it's now to 40%. And from April, it's going back down to 0. The retail discount itself, because it was a local relief, they had to get this in quite quickly. So they gave us the powers under local provisions. It meant that businesses were subject to a cap. So the maximum they could receive was 110,000. So this is mainly purely for smaller businesses. Your larger retail chains wouldn't really get much out of it because they wouldn't be able to apply this to each of their units. Other support that is available. So we've got charitable and non-profit organisations. So if you're a charitable organisation registered with the Charity Society, you can claim up to 80% mandatory relief. So that's straight out, you'll get that relief. You can also then apply for a 20% top up, and that is done under the discretionary relief scheme. So on our website, we have links to the discretionary relief scheme. So the organisation would have to apply for this, and then it would be scored based on a number of factors that the local authority wish the organisation to have. So if, for example, the organisation met all the same criteria as the local authority, then they would score quite highly. Non-profit organisations and CICs, they can also claim up to 100% discretionary relief because they wouldn't get the 80% mandatory relief. Again, they would be scored under the discretionary relief scheme. I said I've got a link at the end to that as well. So hardship relief, this is offered as well under the discretionary relief scheme. Again, all businesses are scored under a certain criteria. They would also need to provide evidence of their annual profit and loss accounts, all those kinds of things. And then they would be scored against the criteria for this. Transitional rate relief. So this is brought in to help with the revaluation. So as I said, we revalue every 3 years. So if a business's new value is quite high, the transitional rate relief is brought in to kind of phase that in, so it's not a massive shock. This is automatically applied to the bill, so the business doesn't need to worry about this. But if you have a look at the bill, if you can see, you'll see the headline figures of how we've worked it out. If there's transitional relief applied, then it'll be show there as a minus on the account. Supporting small business relief. So this is applied for businesses that have lost their small business rate relief. So for example, if you've got a coffee shop that's valued at say 9,000 RV, they were getting small business rate relief, and in the next valuation list that increases to say 16,000. They would lose the small business rate relief in the next valuation, so that's quite a big shock to the system. So the idea of supporting small business rate relief is to cap that shock to, at the moment it's £600 a year, and then that's increased each year to kind of phase the increase in. What is this again is automatically applied to the bill, so you don't need to worry about that. What is important to know is that once the property is empty, we lose that relief. So for example, if a coffee shop's in, then they move out, the property is empty for a while, and then a new coffee shop moves in, then they wouldn't get that supporting small business rate relief, because when they took on the property, they would know what the new value of the property would be. Improvement relief, this is quite a new relief really. So basically this is to help businesses that have expanded the business, and during that expansion the RV is increased. So the idea of this is, say for example a cafe expands and has extra covers, then they would get this improvement relief with the new valuation of their property. So the valuation office will provide a certificate and say X amount of thousands is relieved of this bill, and that is relieved for 12 months. Again, this is automatically applied. The local authority have no jurisdiction on this. It will be down to the valuation office. So April 2026 changes. This is what most people are probably here for. So the revaluation, as said, is done every 3 years. The 2026 revaluation is based on the 1st of April 2024 figures. So what the VOA do is they start this process a number of years ago. I think it was in June 2022. There's about 2.1 million properties in England and Wales. They sent out 1.5 million forms. And the idea was that they would gather all the information on market rents at that point, businesses' income and expenditure, and then they would get a picture of what the valuations of different areas are. Something I wasn't aware of until we had the VOA call was that they also predetermine a lot of larger businesses. So a larger business can be in negotiations with the VOA for some time. So when they come to the valuation, they know what the valuation is going to be, so it's not a huge shock. This year, they valued 2.1 million properties in total. So the RV itself increased to 19.2% overall. So in 2023, the total RV for England and Wales was 70.8 billion. It's now 84.4 billion from April onwards. Nationally, retail, hospitality and leisure has increased by about 17.7%. Offices has increased quite a lot, 14.46%. Industrial, 21%, and other. Now, other covers things like airports, your big football stadiums, all those kind of things, telecommunications. So that's increased quite rapidly, and I'll talk about that in a bit, how that's increased. But there's a small graph here that I've picked from the VOA website that you can have a look at, but you can see the massive increase in the other sector for England, as well as the office sector. So here shows you the differences between the 2023 list and 2026 list. So Canterbury falls under the South East, and as you can see, we've had the second highest increase across the country. So the VOA, they split the country up into 10 areas. So Canterbury falls under the South East. Now, if you can see the map, that stretches past Southampton and up to sort of mid-Norfolk area. That's quite a way, and that encompasses quite a lot of big businesses when you think about it geographically. So I'm just going to point you onto the next page. There's another one here that shows the areas. So as I said, Canterbury falls into South East. So you're looking at Gatwick, Heathrow, the Channel Tunnel, the big RVs. So that's helped drive the increase for the RV increase for the South East. Another area that's quite interesting when we went on the VOA call was the offices were driving the RV increases for the Southeast. As you can see on the heat map, Southeast and Southwest, quite high areas. What they believe that to be was the drive in home working since COVID. So if you think back to the last list, people were sort of stuck in home. They weren't going out into the work. And now with the move to hybrid working, a lot of the drive in increase has been what they class as a grade A stock, which is your new young flashy offices that have high-speed internet, they have coffee shops, all that kind of stuff around them. So they're the ones that are driving the RV increases for our area. Also, things that are increasing are like assembly and leisure. So everyone's going back to football stadiums. Everyone's flying again. So your big RVs are really taking it now. So just for example, Channel Tunnel, their RV on the last list was 40 million. It's now 118 million, and that kind of reflects the fact that passenger numbers are increasing. People are travelling again. So that's where their RV has increased quite high. So how does this affect Canterbury itself? So we asked a local company, a company called Analyse Local, who looks at our data from the draft list. So we've got about 6,000 properties in the Canterbury district. In 2023, the total RV was 154 million. That has now risen up to 179 million. If you look at the pie chart, you can see that retail, hospitality and leisure itself equates for about half of the RVs properties in the area, and that kind of sways with the fact that we are a historical city. We've got a lot of tourism based on that. We've got hotels, all kind of catered to that historical element of our city. However, what I found was interesting is if you look at the chart below the wording, you'll see the differences in the national RV increases and the local RV increases. So one important one there was the RHL. So nationally, RHL has increased by 17.7%. For Canterbury itself, it's only 15.15%. It's only a small, slight difference, but you can see it's slightly lower. Possibly because we were still operating a lot more during COVID than smaller towns. Other increases that we have noticed are in major chain hotels. Their RVs have gone up massively. Things like caravan parks, again, people are out visiting again. And also the office sector. So office sector nationally was 14.44%, but for Canterbury district itself it's gone up to 22%. I think that's because there are quite a lot of new office buildings in Canterbury. Again, they're attracting the more hybrid working because they're offering a grade A stock. People want to work in those offices rather than the old offices that are fallen apart. These ones are much nicer and more better work environment for people. So other changes that have happened are the retail discount has ended. So to stop that, they've introduced permanently lower multipliers for retail, hospitality and leisure businesses. So as I said previously, we had 2 multipliers. Now we're going to have 5. So we've got your standard business RV with RV less than 51,000. Their multiplier will be 43.2p. Standard one for over 51,000 will be move up to 48p. But if a retail business has an RV of less than 51,000, their multiplier will be 38.2p, which is 5p lower than the standard one. And then you've also got the retail business that's over 51,000. Theirs will be 5p lower at 43 pence. So although they're not getting a relief, the RV is multiplied by a lower multiplier. They've also introduced the high value business RV. So those are for businesses over 500,000. They are going to be your mega superstores. They're going to be your warehouse distribution areas. So if you look on the VOR website, you can see the East Midlands areas have been hit by that one a lot because you've got your big Amazon warehouses where the goods fly into, like, say, East Midlands Airport and then are distributed through those networks. I've given you a quick example here of a cafe. £20,000, gross charge will be £20,000 times the small business RHL multiplier. That takes you to £7,640. One thing to note is that as this is no longer a relief, it's a multiplier, the cap no longer applies. So therefore your chain superstores can get that as long as they're within that area in that period. So for example, things like Screwfix, Boots, all those kind of people can get the lower multipliers. One thing also, I've put it on the right, is the property must be open to visiting members of the public to get the retail, hospitality and leisure. So the business has to be available for someone to pop in, pick up some goods or order something, or do whatever they need to do, but it must be open to the public. I've done a list here of qualifying establishments. This isn't a finite list, it's just the main ones that I've picked out. So you've got your supermarkets, your charity shops, your butchers, your chemists, your newsagents. All of those businesses will be covered by the retail, hospitality and leisure lower multiplier. All those businesses where people can hire goods from, so if they're going to hire a car or bicycles. Any businesses that provide a service, so you're looking at your laundrettes, your tattooists, post offices, all those kind of businesses will be covered by the lower multiplier. Businesses that offer sale of food or drink. So this can be consumed on or off the property. So your restaurants, your takeaways, coffee shops, pubs, bars, all those will cover. Anything that is used as a hotel or as a boarding or guest house by members of the public, they've quite clearly put on there, this doesn't include any nursing care, so this won't include things if you're getting substantial board or nursing. As a use as a caravan park, campsite, self-catering, all those kind of things are covered, so your Airbnbs. And then on the right, you've got the use for the provision of cultural, community or recreational facilities. So these are your libraries, your museums, all those kind of things. They will all be covered by the lower retail, hospitality and leisure multiplier. Other budget changes. So as I said earlier, they've introduced the extension to the small business rate relief. So previously, the business would only get the extra relief on the original property for 1 year once they've taken on a new property. So from the day after the budget, if a property is taken on, they can get that for 3 years. The idea is to provide a little bit more certainty and a bit more stability for the business. So if they're doing really well and they take on another property, they can keep that relief on the original property for 1 year, for 3 years, sorry. Transitional relief, so we've got a new list, so they will also introduce a new transitional relief. So again, this is automatically applied to the bill. The whole scheme itself is worth 3.2 billion across England and Wales, and the idea is to gradually increase the RV, the bill. So for example, in the Channel Tunnel example I gave you, although the RV has risen from 40 million to 180 million, that increase won't hit straight away. That will be gradually brought in over the life of the list. Supporting small business relief. So, as I said, currently the retail discount is a local scheme, local relief, whereas the new multiplier is a national scheme. So it could be that there is a business that qualified previously but doesn't qualify now. If that's the case, that business will then get supporting small business rate relief. So although they'll lose the retail discount, their bill will be capped. Currently, it's going to be £600 and it will be increased to £800, and that will increase cumulatively over the life until the relief runs out, basically. And then, but if they're entitled to transitional relief, they'll get that instead if that's more. Again, this will be automatically applied and the system will work out which is the better of the two. Transitional relief supplement. Now, this has been brought in just for 1 year, and the idea is if there's any businesses that aren't entitled to any of the reliefs for transitional relief or supporting small business relief, they will be charged 1 pence on their multiplier. So if the multiplier is say 55.5p, they'll get charged 56.5p. This is for 1 year, and the amount that they raise is used to fund the transitional relief for all the other businesses. Another scheme that's going to be brought in is the electric vehicle charging point scheme. We haven't had the full details of this. This is still being thrashed out. So what we have been told is that there will be 100% relief for 10 years for any electric vehicle charging points scheme. This must be separately rated by the VOA. So for example, if you've got a building that's got electric charging points, if that is included in the calculation for the building, that won't get the relief. The charging point has to be really valued separately. But more details will come out. Once we get more details, we'll put that on our website to give you a bit more understanding of what's happening. I just want to quickly go through recovery. So with all these changes coming up, I can appreciate some people are a little bit nervous. So I wanted to go through the recovery phase with you. So we've got the bills are issued in March 2026. That's in time so that we can make sure the instalments come in on in April. There are a number of stages to the recovery process. So the bill will go out, and then if the instalments aren't kept to, reminder notices will be issued. If after the reminder notices are issued, the account's still not brought up to date, then a final notice will be issued. At that point, the bill itself, for the whole amount owing, is due at that point. So it's really important that people tell us straight away if they're struggling. After the final notice, if the account is still not brought up to date, then it goes to summons, and then extra costs are added at that point. At the summons stage, we also provide an auto SPA, so basically a payment plan will be provided for you, and that will include the costs of the liability order. If none of that is kept to, then the case will go for a liability order where further costs will be added. Then there will be a pre-enforcement letter advising that the account will go to the enforcement agents, and then if the account is still not resolved, then it will go to the enforcement agents, and they will add on further costs. So they will write first, and that will add on, I think it's about £75, and then if they don't get a payment arrangement, then they will go down the the visit route where the costs start to increase. What I want to say to people is, if you're struggling, please let us know straight away. If we're told quite early on, we've got more wiggle room. So it could be you get your bill in March and you think you're really going to struggle, contact us straight away, because it could be that we can extend the number of instalments you've got to kind of spread out the cost. We could change the frequency. If for cash flow purposes you prefer to pay weekly, we can do all that for you. What we have found is that a lot of people will go down the VOA route, but they won't tell us until we do the summons. But at that point, we've gone quite a way through the year. Waiting for the VOA to do a check challenge appeal is not a valid defence for a liability order. So I advise you, if you're doing a valuation check challenge appeal, please let us know straight away, because then we can hold recovery for a little bit, or we can advise you to make smaller payments. The idea being that we cannot guarantee that the valuation office is going to reduce the RV. At which point, if you've waited all that time to tell us, you've lost a number of instalments in the year. And then if the VOA say, no, we're not changing it, then you could be at a point where you've got the next bill due. So we don't want that to mount up. If you make payments and the VOA is successful and the VOA reduced the RV and you've overpaid, then we will refund you. If the RV is reduced, and there's no liability on the order on the account, we can also award interest. But we can't do that if there's a liability order. So it's really important that people tell us straight away so we can stop it getting to that point. What I've put on there is to check your bill when it arrives. So basically, when this was all announced, we've had to go through every property in the Canterbury district, as you see, there's 6,000, and try and work out if the RHL in multiplier should apply. We were under a tricky situation because the properties that are valued by the VOA, the description might be wrong. So for example, in Ramsgate, for example, there is a bank that is now classed as a thrift shop, so it's retail now. So previously the bank would never have got the retail discount because it's under a financial institution. However, a thrift shop, because it's retail, would get the retail relief, retail multiplier. So because the valuation office don't often change their descriptions of buildings, we need to know that it's no longer a bank. So for example, we have to go through each property to check that the retail applies. If you get your bill and you think you are retail, then please let us know, and it's not on there, then let us know, because it could be you're entitled to the lower multiplier. As I said, there's 6,000 properties and that we have a very short time frame to turn this around. So any that we weren't sure of, we're starting to write out on. So if you get a letter through saying, can you just check which type of business you fall under, please respond so we can make sure that's in ready for the annual billing. Check your bill when it arrives, check the instalments are correct. If you're not happy with the valuation, you need to contact the valuation office straight away. I would advise people to sign up to e-billing. So if we amend the account, the bill will come out within the next day or so. Whereas the Royal Mail is so slow at the moment, it could take days for that to come, and that time is pretty crucial if you're really struggling. I've popped up some other information here, so always have a look at our website. Any changes that we're aware of, we'll put up on there for you. So that's the canterbury.gov.uk business rates website. Then we've got the valuation office website. As I said, we had the call the other week with the valuation office, and currently, so we've got the 2023 list that closes at the end of March. So if you're unhappy with your current valuation, you've got to raise a cheque before the end of March. Now, the problem we've got is the valuation office rely on the business owner to go in and claim that business on their website. So they'd need to go in and create an account, and that can take about 15 days. So don't wait until the 31st of March, do it now. So go in, I've highlighted there which bit you need to click on, find your business, so you can look on your bill, it will show a property reference, or you can type in your postcode and find the business there. You'll go in, you'll claim that business as yours. If you're not happy, then you log in, log a check at that point. Something that also you need to remember is the valuation office can take a number of months to provide to do a checker challenge. So again, you need to get this in straight away. And if you're doing any checker challenge, please let us know, and please keep us updated with where you are with it, because we're not, as a local authority, we're not told until it comes through on a schedule. Other information I've put on there is the actual website for the gov.uk. It's very important to keep an eye on that. That will show any business rates relief that you might be entitled to. As I said, there's improvement relief on there that's quite interesting. There's a lot more information that you can delve through and have a look through there. I've got anything more to add. As I said, we're still waiting for the pubs to be ironed out. From what we've been told, they're just going to be targeting pubs. We don't know how that's going to be done. I suspect it'll be some sort of pub relief, but until we're told, we don't know. So as soon as we know, we will put it on our website to explain that again, but we'd have to go through all that work as well. So any questions that anyone's got, please feel free to ask.
Sara, thank you so much. If you want to stop sharing, we can put your email in the chat as well, because I think what we'll try and do now is allow people to unmute to ask their question, or you can put your question in the chat. And while you're doing that, just a couple of things, I suppose, to say, which I'm now not speaking at all on behalf of Canterbury City Council or Partnership One. There's a long-standing belief amongst many who represent business organisations that the business rate system needs to change. It is broken. It doesn't kind of make a lot of sense, and we can kind of see how they're trying to sort of patch things together here, and I mean sort of national government and valuation office. So that's our view. That's the view of many membership organisations. So whether that's the British Retail Consortium, UK Hospitality, British Beer and Pub Association, and on and on and on. Wearing my other hat as chair of the Association of Town and City Management, we run the Sector Leaders Group, which often has attendance from Treasury and MHCLG. So these issues are raised, but it is a bit of an uphill battle to get the whole system changed. As Sara said, the pub relief is coming through now, and there is a significant amount of lobbying for other areas, but as yet no movement on that. But someone has asked about the PowerPoint, and yes, that will be shared, and it will be easier for you to see. I know on a couple of those slides it was hard to read all the print, which Sara talked us through, but you'll be able to see that. And then when we send that out, we'll include all the links that Rachel's been putting in the chat as well. But does anyone have any kind of general questions about how this is working? No, that's okay. The other thing, a question you may not have thought of yet, you might have, this is about business rates, but I'll just quickly touch on the bid levy because it is linked to your rateable value. It is a small percentage of your rateable value. The bid levy in the case of Canterbury doesn't change. The list doesn't change throughout the 5-year bid term. So from 2024 to 2029, your bid levy is calculated based on the list that was published in 2023. So your bid levy won't be increasing to the new list. That change would happen for the next bid term post 2029. Right. don't see any questions. I'm just going to leave it another minute. Equally, if there are things that you would like to ask us as a bid team, if you want to do that now or follow up later, that's absolutely fine.
Can I just say, I just think it's very important that as soon as the bills come out, that everyone looks at their bill, understands it, and if they're not happy, then they need to tell us straight away. The longer we've got to negotiate and deal stuff throughout the year, the better. But if we're told right at the last point, we don't have much wiggle room. So we'd rather people tell us straight away. But yeah, no, I said information's on the website if they need it. But yeah, please tell us if you're struggling, because there could be something else that we could do to help you, whether it be change instalments or hold recovery for a bit while you're waiting for stuff to happen. So yeah, please tell us. We find a lot of people bury their heads in the sand, but we'd rather you tell us straight away so we can give you some help.
And Sara, what's the likely turnaround time? Because obviously you're a relatively small team. What can people expect?
At the moment, we're working to about 8 days, so we're pretty much up to date. But we anticipate a lot of people querying after the bills come out in sort of mid-March time. So we expect from about mid-March to about June to be quite busy. So you're looking at probably about a 14-day turnaround at most, we would hope. But again, if a lot of people can check their current bills at the moment to check what they are, if they're getting retail. If they're getting retail now and they don't get the multiplier in the new year, they need to flag it straight away, because then we can recalculate the bill straight away.
Okay, so if there's anything they think is wrong that you could check it at the local level, which is to do with the Ramsgate Bank example, then you could do that now. But even if they feel they're going to need to query this with the valuation office, they could flag that now with you.
Yeah, I would flag it now, because then we're aware. That customer has raised a flag with the VOA. As said, we have no jurisdiction over how long they take or what decision they make. So we advise to try and keep making some payments to keep the bill going, to avoid it going down the recovery route and adding extra costs that are unnecessary. As said, if the RV is successfully challenged and it's reduced, providing there's no liability order, then if they've overpaid, then they would get interest on that. So I think for a number of years, interest rates have been historically low, so we've never really offered it. But now the interest rates are a lot higher than they were a few years ago. That businesses are entitled to interest if the RV reduces and they've overpaid on it, because that's money that should have been sitting in their account at the end of the day.
That's really helpful to know. Thank you. That's great, because there will still be a bill anyway. So even if payments are made, there could be money owed, or even if money is due to be reimbursed. That's great to know about that interest calculation. Thank you. I'm not seeing any questions, which is fine. I know it's a lot to digest. Thank you very much for joining us. Keep an eye in the email when we send around the PowerPoint and the link. We'll send various other links, as well as to some of our other training and webinar sessions coming up. So there's a lot on the program this year. It's big change. So we're doing everything from AI to some legal aspects that are coming up that we all need to know about, and just based on the kind of feedback and the sessions that you've wanted from us. So thanks everyone. I'm seeing some messages in the chat. Great to see you all. We'll end it here and hope that you all have a really good day, really good week. Take care.
Thanks everyone.
Thanks, Sara.
Bye.
Bye-bye.